Well, Martin Koehring is a Eurozone analyst from the Economist Intelligence Unit, and he joins us from our studio in central London. Thank you very much for joining us. Do you think this is going to be enough?
Well, it's going to buy a lot of time, and that's the key. I mean, it's a major progress in terms of actually saying that there's unlimited support for, to bring down borrowing costs. That's a major difference to what happened before. Currently, these governments, these troubled governments such as Spain, Italy, Portugal, Greece and so on, they depend on a bailout fund that is limited. It only has about 500 billion euros firepower once the European Stability Mechanism comes into effect. So this is a major change. There's unlimited support, and also there's no time scale. So in theory, it could just go on and on and on, because in the background there's of course a big plan. That's the fiscal and the banking union that Angela Merkel has been talking about as a more permanent, more robust system to be part of this of the monetary union as well. So fiscal union to accompany the monetary union that we have in the Eurozone already. So it's going to buy a lot of time, and that was the key.
When the ECB says this is all strictly within its mandate, it's just exactly the right thing that it should be doing, you wonder why it hasn't happened sooner, and a lot of angst could have been avoided, couldn't it, that way?
Yes, but we shouldn't forget the fact that Germany actually opposes these measures, particularly the Bundesbank, the German central bank, which was the main objector to this to these new plans. Their central bank governor, Jens Weidmann, was actually overruled. He was one of the few, or potentially the only one, who actually opposed Mr. Draghi's measures, and that's a major obstacle because Germany has a major inflationary bias. So they are concerned that putting so much money into the market will eventually drive up inflation. And secondly, there's the risk of moral hazard. So the more you support the governments without this conditionality attached, the more these governments are likely to keep spending and not reducing their public sectors. And that's another major risk that Germany is concerned about, but they were simply overruled this time.
So weighing up those concerns with the decision that has now been taken, do you think that those are very real hazards that lie ahead, or is this in the end really the best course of action?
Well, first of all, the most important thing is that the ECB has now stepped up the pressure for Eurozone leaders to come together and agree on a plan for Spain to ask for the help, because the ECB will do nothing unless Spain and potentially also Italy actually ask for help from the bailout fund. So that's the first thing that has to happen. And secondly, there are major risks that potentially could derail this plan. First of all, on the 12th of September, we have the German Constitutional Court ruling on whether the bailout fund will go ahead. Although we currently think there's a minor risk that they will say no to the bailout fund, but there is a risk that this will happen, that the bailout fund will not go ahead because of the German Constitutional Court. And there's also the risk that Greece will leave the Eurozone if the troika of international lenders says that the Greek government hasn't made any progress on their plans. And that decision is expected by the end of September. So there are a lot of risks on the way that could derail this plan.
Martin Koehring, thank you for joining us.
And I'll let